Good morning. I'm Eric Kazatsky, Head of Municipal Strategy here at Bloomberg Intelligence.
And I'm Karen Altamirano, Senior Associate with Bloomberg Intelligence.
So rates are higher for longer, if we're being honest. The curve's pancaking, and once again, fixed income losses will be headline fodder going forward. However, with all of these things going on, we still believe there's a huge opportunity set that a lot of people are not taking, fully consideration of. Here, joining myself and Karen this month to talk about the opportunity set, macroeconomic headwinds, and also technology changes afoot in the municipal space is James Pruskowski, Head of Global Client Business at 16 Rock Asset Management. Welcome, James. Thanks for joining us. And just before we hop into any questions right now, I just want to say the full conversation with James is going to be available via the Masters of the Universe podcast at the links below under the YouTube video. So once again, thanks for joining us this week.
Appreciate it, Eric. Thanks, Karen.
Yeah, thanks so much for joining us.
So Karen, we were talking a little bit before we hopped on the video just about the rise in all of these startup technology firms that we've been seeing, whether they're Bloomberg competitors or competitors for MMD or competitors for ICE, there doesn't seem to be a shortage of interest in coming in and being a muni disruptor.
Yeah, so our question for you, James, is really how do you see this rise in startups impacting the muni space?
Yeah, I think there's a pretty high degree of focus that's going on, more so than the market's talking about. I think people are well aware of some of the firms that have been created out there to help support the move towards algorithmic trading or artificial intelligence. I think, a lot of the focus historically has been on more or less nowcasting and modeling, regression-based modeling of historical data. And the next transition is more on the forecasting side, pattern matching, scenario analysis, personalizing your approach to be able to create alpha and differentiate your products. No one firm out there is going to be able to do it on their own, meaning that a lot of the firms that are out there now are focusing around the base scenario in terms of those regressions or modeling curves, and really need to partner up with or expand into the personalized stuff. And getting there is they've achieved tremendous success in terms of standardizing and organizing a lot of the data. The rest, as I said, is about pattern matching, behavioral analysis, and being able to natural language process it all. So I think that in a world that's consolidating in terms of low cost ETFs and the beta performance that's being created, the alpha opportunities that we're focused on here within the industry, on the technology side in terms of delivering the performance part of it, I think is going to have pretty important implications. And ultimately, it certainly helps in terms of, in a world focused on fee compression and driving down costs, clearly some of the benefits that creates the technology side in terms of helping you achieve that lower expense ratio and improving, obviously the economics of a portfolio.
Awesome. James, thank you so much. Excited for the rest of this conversation. Thanks for joining us.